It's weird to think about it, but in a lot of countries, that's not even possible. Started with the New Deal, right? FDR's New Deal. If y'all remember, I don't know, middle school, high school history class, 1938, on the heels of the Great Depression, created Fannie Mae, which, long story short, gave birth to like the 30-year fixed mortgage and just the implicit government backing of this security that could sort of socialize the risk and create liquidity for people to borrow like huge amounts of money to buy homes, and kind of led to the reason that during most eras and most times it's been doable for like a middle-class family to buy a home, right? It's weird to think about it, but in a lot of countries that's not even possible. It certainly isn't possible with a 30-year fixed mortgage. People will look at you funny if they come from like we have coworkers that live in Canada, and they'll ask you 10 questions about what a 30-year fixed is, and it's just a 30-year loan that has one rate in payment for 30 years. They can't believe it.
And I know we've talked about this before in the podcast, very unique to the US. One of the points that you were making there, Jim, was kind of having the conformity of mortgage-backed security plays an important role in the overall market, because if we didn't have this kind of central standard of what a mortgage is so that it can be securitized and then prepped for investment, we'd have just a decentralized credit market across the country. And those credit markets wouldn't be as liquid because you don't have the conformity. You don't have the volume to be able to allow traders to know that there's going to be someone on the other side who's willing to buy or sell. And that whole, component of the market helps keep interest rates net lower. If the credit market was decentralized, if there wasn't a conforming 30-year fix, maybe there is a California 30-year fixed or a New York 30-year fix or Texas, and they just operated in those zones, those markets wouldn't be as liquid as having a national market, and then rates net would be higher. So we luck out on multiple fronts in the US with this. We have lower interest rates because of the conformity of the market, the liquidity of the market. So it's a really special market that we have here that we're all a part of, but sometimes don't always realize just how unique it is and all of the different factors that are help making it work.